Dan Clifton, Head of Policy Research at Strategas Research Partners, joins us now. Dan, very good afternoon to you. How significant is this? Do you think this opens up a new sort of toolbox of potential actions from the president on China?
Well, that's right, Wilfred. Thanks for having me on. And, you look at the action itself, it's largely symbolic. They're going to consult with the IMF. My sense is the IMF is not going to find any serious currency devaluation by China. And then that's going to set up a new set of tools for the president to be able to act. One of the options that the administration is looking at right now is where a U.S. company can petition the U.S. government and then and say that they're being hurt by currency devaluation, where a foreign company can keep their prices lower, and then the U.S. would then be able to put tariffs on those products. That rule has been moving through the Department of Commerce. There was some disagreement between the Treasury Department and the Department of Commerce, but now the Treasury has labeled China a currency manipulator. It seems like those disagreements are past. Now, I would caution that this isn't imminent. This doesn't mean it's going to happen. China sort of pulled back on its currency today, but you're creating the tool to be able to move on something like that if there is a situation where the currency still becomes a problem in the administration's eyes.
So where do you expect these tensions beyond just on the currency to go from here? China last night indicated that it's stabilizing its currency, and it's not going to necessarily just, despite the U.S., let it go on a one-way ticket lower.
Sarah, I think that's in their best interest, to be honest with you. We believe that China is feeling a lot more economic pain than people realize. I'm uncomfortable watching all these events go on and seeing the U.S. economy weaken. Think about if you're a leader in China, your currency is being devalued, you're having your supply chains leave, you're reducing the purchasing power of your consumers, and you're having capital outflows. So the more that currency depreciates, the more pressure is going to build on the Chinese leadership. I think the consensus over the last 48 hours is people talking about Xi trying to wait out Trump for the next 15 months. That becomes harder if they're going to be depreciating their currency. But by nature, both sides are saying that they can't have an agreement right now. We've gone back to the corners, and we're trying to inflict as much pain on the other country as possible. And so there's going to be more economic pain. And the idea is that once you get so much pain, then you can bring both sides back to the table. The risk, Sarah, is that that you've created so much pain that you've broken out the trust, and it makes it harder to put the two sides back in a room together again.